Hey guys, Nick Supik here again, Century 21. Wanted to take today to introduce my buddy here, John Kearney of Victorian Finance. Just kind of see what he's going to share with us a little bit about mortgage processes and the types of loans that are best for different folks. So John, real quick, how long you been doing?
I started back in 2009, right when I got out of college. I went to Slippery Rock University and just started doing mortgages, started working for Northwest Savings Bank, and that's when I first got started.
Wow, that's awesome. So you work for company Victorian Finance. Century 21 and Victorian Finance, we kind of work together a lot.
Yes, for sure. I started with Victorian Finance back in 2016. Sonny recruited me to come. Sonny's our president over to Victorian Finance, just specialize in doing mortgages because at the bank I did a lot of different other financing aspects. Auto, did life insurance, health insurance, mortgages, did a little bit about everything at the bank. So I came and specialized in just doing mortgages.
Okay, that's cool. So, at the end of the day, we're here to talk about mortgages and loans and stuff. So what different types of loans are available through Victorian Finance?
We do over 200 different types of mortgages. It's just going to depend on, we do like all the FHA, USDA, VA conventional loans. We have the PHFA products, which is the state housing products. We are licensed in 41 states for Victorian Finance. Wow. And we're licensed to do the state housing, loans in every single state that we're licensed in. So West Virginia, Ohio, they have all those state housing programs, which is a nonprofit run by each state.
Now, something you didn't mention there, the luxury market's actually going gangbusters still, and people don't realize that hasn't been affected a lot. So what type of loans are those?
You have they're basically called non-conforming loans, but they're jumbo loans. Anything over the maximum conforming loan limit of $726,200 pushes you into the jumbo loan market, and that becomes more investor specific, meaning underwriting guidelines are specific for that client. They're a little bit tighter because it's all uninsured money because it doesn't meet the requirements for Fannie Mae and Freddie Mac, which Fannie Mae and Freddie Mac are regulated by FHFA, and they basically set the underwriting standards for mortgage-backed securities. Non-conforming loans like the jumbo loans can't be sold as a mortgage-backed security in the secondary market. Wow. So that's why they're a little bit tighter to qualify for.
So really, just to break that down, at what point do you have to go into a jumbo loan?
When your loan amount's over $726,200. Okay. In our area, other areas across the country, it varies, but in our area here in Pittsburgh, it's $726,200.
So then the first-time home buyers, you got what? The USDA, you mentioned the FHA.
Actually, FHA, USDA are not first-time home buyer programs.
Oh.
Okay. You can just only have one loan open at a time for FHA, and USDA, you can get another USDA, but you can't own any other property. So you could basically own only one property. Okay. VA for veterans, that's not a first-time home buyer product, but there are 3% down options for conventional loans. You have the Home Ready and the Home Possible, which are two federal programs. One's run through Fannie Mae, one's run through Freddie Mac, and it has a discounted interest rate and discounted mortgage insurance. Oh, wow. But you have to be low to moderate income, so they set income thresholds.
There's income thresholds in those different.
Like you can't make too much money.
Okay. Well, we don't want to not make too much money, right?
Yeah, exactly. So they should have set, but it's only on the Home Ready and the Home Possible, it's only on the qualifying income. So we'll say if you have a lot of overtime and we don't need your overtime to qualify, we could potentially put you into that product because we're not using that income to qualify. So it's normally it's under right around $75,000 and under a year.
So what do you see? Of the percentages of loans, real quick, like FHA, USDA, what'd you mention, the non-performing,
the non-conforming, the jumbo loans.
What percentage of people do an FHA versus a USDA versus a conventional?
We'll say this, the reason why Fannie Mae and Freddie Mac came out with the Home Ready and the Home Possible, the 3% down, was actually to compete against FHA because 60% of the overall loans are being done by FHA. Wow. So we're seeing a lot of it gearing towards conventional, especially over the last 2 years. You want a lot of more conventional loans than government loans, but I'll tell you this, moving forward over the next few years, you're going to see more and more of the government products coming back into the mix.
Okay. So what else would somebody need to know when they go to kind of like apply for a loan or a pre-approval or?
What you want to do is you just want to get your ducks in a row, basically thinking about how much money you make a month, also comfort level of what you feel comfortable paying monthly, what you feel comfortable also bringing to the table at closing. When I'm not talking just credit score tracking. You definitely want to look at that. One good tool is to track your credit is Experian Boost. The Experian app seems like it's the most accurate credit tracking app that you can basically get.
Okay. So in the pre-approval process, like how long does it take for somebody when they call you on the phone or email you to get pre-approved?
We basically within 24 hours,
Wow.
You'll have an answer.
Okay.
So normally faster than that, but if you apply at night, depending on what time it comes in, it won't get done till the morning. So we always say 12 to 24 hours, but more often than not, if it's during the day, it gets done a lot faster.
That's quick because, I mean, I've talked to some people, they're like, oh, wow, we contacted our bank last week and we're still waiting. I'm like, well,
Yeah.
you know, these houses are moving so quick sometimes that they're not even pre-approved and the house is gone and, you know.
Yeah, and that's another thing with the bank is you got banker's hours, the 9 to 5, where we try to be more flexible, geared towards the real estate market when you're looking at homes after work on the weekends. So we really try to be cognizant about that. And also, we're 100% electronic.
Okay.
So we can do automated verification of assets, automated verification of income. So we can do a lot of everything. It just as you apply, it's automatically checking the information that you're doing. So that's why it's speed and efficiency is really one of the assets that Victorian Finance can provide.
So, I mean, there's a lot of information you just shared there. And so I'm sure some folks are like, that's a lot. So how can they contact you to kind of get a little more personal idea of what they're going through?
You could basically you can go to the Victorian Finance website. I have a website right on there. You could also just give me a call on my cell phone number, which is the best way to get a hold of me. It'll all be in the Facebook post.
And there you go.
With all my contact information. Best way is just give me a call, shoot me a text, or send me an email, and we'll set up a time to talk, and we'll get everything structured and everything set up for you. Even if you don't want to apply, I'll be able to give you the information that you need to basically vet other lenders. Even if you're not working with me, which I do understand, it's just more or less giving you the knowledge base to be able to go out there and purchase your first home.
I mean, sometimes I've talked to folks and they're pre-approved with some other bank or company. I'm like, you get at least a second, I mean, maybe even a third opinion, but a second, you know, just to kind of get some additional eyes on that. Because, I mean, I've always kind of been like, you need to know what your cash to close is going to be, what your payment going to be. If you know those two numbers, you know, everything else kind of fits together and you can kind of determine, hey, the rate was out of whack.
Information, and it gives you out a pre-approval or pre-qualification, however you want to describe that. But the biggest thing is you want to talk to somebody. You want to make sure someone's checking everything before you issue that pre-approval, because one of the things is you want to make sure you're approved. At the end of the day, our conversion rate from pre-approval to closing is 95%. The other 5% is normally like lost job or something that you could not plan for. So we have a very good conversion rate from pre-approval to closing. When you have a lot of the online lenders, like it's normally like their conversion rate's like 1%. So you just want to be cognizant of that, because you could legitimately type in your information and it'll give you a pre-approval without really being vetted by somebody who knows what they're doing.
Well, that's cool. Well, I don't want to take any more of this guy's time because he's, needs to be getting on the phone with some folks that are trying to get pre-approved. Who's calling? I think somebody's calling right now. No, but thank you so much. Century 21, Nick Supik. This is John Kearney, Victorian Finance. We're grateful for you. I hope you guys have a blessed day.
Have a good one.